Good morning, everyone, and welcome to a Wednesday, August 11th, and the on-time on-target morning brief, where Investopedia high precision on an everyday basis. Blah. Goodness, the rough start this morning. Wake up Wednesday. All right. We're going to talk today about Pfizer. Now, you may think Pfizer, boo, boring. Why is he buying Pfizer? Same thing with AbbVie, because I'm a big buyer of both right now, and I have been for some time. And I'll show you these charts, and I'll show you why. But the real thesis here is, if you back up to 2021, at the beginning, we needed stimulus to pass. It did. We needed to beat COVID. We did. Asterisk, come back to that. Beat COVID. Economy opens up. We're going to need to pass an infrastructure bill. Close, right? And then we have to make sure inflation was under control. It did increase there for a while. Everybody got a little bit excited about it. Now people are getting a little more concerned about it again with the infrastructure bill passing. Yes, it's large. And then now we have a 3.5 trillion budget on the table. So yes, inflation's back in play as far as a concern. And then we're going to have taxation. So when you really look at all of those theses throughout the year, we are in a situation where we beat COVID and the market goes higher and some of these names sold off, and now we're back. Right? We don't know whether we beat it or not. The Delta variant's here. Maybe there's more variants out there. Maybe this is something we deal with the entire lives, like the flu. A lot of unknowns out there. But the bottom line is the fact that the healthcare stocks are going higher, and in the healthcare space, being in the vaccine stocks has really been the place to be. And I think in the face of increasing inflation and or tax reform towards the end of 2021, it will be a safer place to be than some of the big tech names, if you will. So what does that really mean? Are they going to hold up if everything starts falling off? No, not necessarily, but they're going to fall a lot less. And a lot of them are buffered by large dividends. Pfizer at 3.5, AbbVie at 4.5. That also kind of mitigates the stock falling, because remember when the price falls, a set dividend amount now means the yield increases. So for a given dollar amount, say $50,000, let's use $100,000 because it's a Wednesday and I can't talk or do math, so we'll use something easy. So if you have $100,000 and they pay out, $4,000 in dividend, well, that's simply a 4% yield. However, if the overall holding goes from 100,000 down to say 80,000, and now it's still paying out that set $4,000, now that's a 5% yield. So you can see how it becomes more attractive as the stock falls. So that's why I say there's a little bit of a buffer underneath those stocks out there. So that's what we're going to talk about today. For our question, we're also going to talk about the Investopedia Academy, which honestly I discovered this morning. I didn't know this thing even existed. But I'll flip around it real quick. This is something, if you're a parent out there, I would say this is something that if you can, if your children are showing any inclination towards investing, this would be something you might want to buy for them. It's $200, so it's not, free, but very focused areas, very logical sets of videos and things. And, Investopedia follows the USA Today model, where they're really targeting an 8th grade reading level. And I'm not saying that to insult people. I'm saying that because it's easy to understand what they're saying. So it has to pass, you've seen the grammar programs that'll tell you what reading level this is written at. Well, they intentionally go back and dumb it down if it scores too high, right? So you can understand what they're saying, which is pretty nice. All right, the longs for the days, we do have some folks that beat earnings. Wendy's is one of them. Again, they've kind of been on fire lately. Beat earnings, increase their revenue, or beat earnings and revenue and increase their outlook. So kind of the triple play there. Also, we have Coinbase, which is kind of on its way back up. Posted some good numbers out there, so we'll look at that chart as well. And then NLOX, which I'm not as familiar with, NLOK is a company that has acquired a cybersecurity firm from the UK. So Unlock, I don't know, it's in the cybersecurity space somewhere, but they're jumping on that news. So that's on the way up. As far as the short side, we have FGen, which is a drug. It's in the healthcare space, and it did not get FDA approval for one of their drugs. So they're kind of back to the drawing table. And the stock's been kind of hit pretty hard up to this point. I'll show you the long-term chart, and I think it's got a lot more room to run to the downside. All right, so that's what we're going to talk about today. Thank you so much for checking us out. If you're on replay, make sure to subscribe, hit the notifications bell. Also, if you want to Join us live in the room. There's a Q&A window and a chat window for you to ask me questions real time, and I'll answer those while we're on air. It's only $25 a month, pretty good way to invest in yourself. With that, let's go ahead and get started. All right, welcome back. Here's our lineup card for the day. Standard disclaimer applies right here that this is a financial education presentation. So you have to do your own due diligence before acting upon anything I say today. Full disclaimer information is available at ototandnow.com. All right. The mission objectives today are to grow our money, protect our money, and live off our money. Specifically, we're talking about mostly growing our money, but also protect our money as well in the event of a downturn in the market towards the end of 2021. I do think that's coming. So there are some things that are actions that are necessary to take before that. And part of that is a shift to safety. And part of the shift to safety is going into names with bigger dividends that have more of a muted downside, if you will. You don't just quit, take your football and go home, but you do get into names that have a little more protection out there for you. All right, question of the day we already talked about. We'll come back to it after we get through the open. For our flow, we're going to go long, short, open, short, long today. What that means, we're going to take a look at the market review. The headline around the world, we'll come back to our headlines. We did get a good, air quotes, you got to say good with inflation, right? We got an inflation number. The CPI report was out this morning and actually moved the market pretty well from, we expected a 0.4%. This is month over month number, so a 0.4% increase, and there was only a 0.3% increase. So all in all, a decent number, even though it's still going higher. We're about a month to a month and a half from knowing the CPIW, which will set Social Security and military retirement increases. But again, we're expecting that to be in the fives. I'd be surprised if it wasn't in the five. Unless there's some political thing that can drive it down to like a 4.8 or something. But 5 is where I think is where it's going to be. All right, as far as the flow, we're going to take a look at Pfizer, AbbVie, Moderna, BNTX, J&J, get through our market open, and contingencies and academic resources are standard. All right, let's go ahead and take a look at the chart over here at TD Ameritrade, thinkpipes.com. You have 4 screens in front of you. This is our day trading. I want to show you this up front for those who like to get out in front of things. We do have, this is the CPI number release where you see this big green stripe up. And again, the markets are all in the green now because of that number. Here's your Wendy's chart. On the 1 minute, you see the earnings down here. Conference calls going on right now. It appears to be holding up to scrutiny during the conference call. So that's good. We have Inlock with the acquisition. Let's switch off of Inlock. We'll come back to it and go Coin. Coin had its earnings call a lot earlier today, but it's been kind of a straight up move from there. Higher price points, it's a little tougher to trade. So just make sure you keep that in your cross check. Lastly, FGen, this is our short of the day. If you go back a couple months, you're going to see that they dropped significantly, basically, 3.5, 4 months ago. Kind of beat up, came up higher here and then had a more recent fall. And then now they have this whole earnings release. I don't know why they have this earnings release so close, but you can see that there is, it is in the negative. And if this opens up negative to the tune of 5 or 6%, it has a lot more to fall to the downside. So that's what we'll be taking a look at. As far as zooming out to the overall market, here we are, basically been a straight up market for all this time. Just continues to power higher. When you look at the budget and you think $3.5 trillion, the market's going to celebrate that. You may think, okay, personally, that's fiscally irresponsible. It may go against your politics. It may go against your small government beliefs. But if you believe in large government and spending your way out of these problem areas, well, then you're getting your answer, because 3.5 trillion is a lot of money, obviously. And market's going to celebrate that because it is more pumping juice into the market, if you will. So not concerned at all about the market until literally we start talking about tax reform. Okay, for our 5-day look, you can see nice big move up this morning based off of the CPI news. All right, go back to our day trading chart and come back to that here in a few minutes after we talk about the market and the market open here. Here we go. Get back to the futures and see where they are. All right, there's your banner. 120 points after inflation report is not as bad as feared. All right, so we've got the Dow up a third, S&P up a fourth, and NASDAQ really up a third across the board. We'll take a look at, I got to get used to my new order here. Bonds hardly moves, pretty tight at that 1.34 level. Oil down a little bit, 67, still above our 40 to 60 range. Gold and silver are mixed. Europe is in the green across the board. Asia's in the green across the board, and crypto's in the green across the board. So everything is pretty much up this morning. And Ripple's even up almost to 2 to 7%. So remember Bitcoin, we bought back into MSTR at around it's high risk, so I didn't buy it for everybody. But that was 50% ago, and it was like 3 weeks ago. So pretty nice move up there. All right. Weight Watchers got a downgrade. Let's see what else we have for today. We'll look at the analyst calls here real quick. Coinbase is a buy, as again, that's one of our, just had earnings yesterday, last night, if you will. So you can see the numbers there. I'm not behind this name, that. It's probably going higher before it goes lower again, though, since it just beat earnings. So I don't know if you believe in the thesis of this stock, you can buy in here. Just I'm not sure it's a hold for forever kind of stock, but have to admit it's probably going higher from here. All right, ADP downgrade, Splunk Inc. upgrade, FedEx, yep. Blackstone to a buy. Blackstone's been on fire. Huge move up. And again, Blackstone benefits from if there's a lot of volatility in the market, they're the ones that stand to benefit. So again, moving into Blackstone, not really looking to trim any here, even though the gains have been tremendous. All right, Amazon has a new headline out today. They're 1.5 billion, 15 billion something air mall in Kentucky. A big air hub is going in out there, and I guess it is operational today. We'll probably see that headline here in a second. All right, let's get back to the main screen here. There was the Amazon one. I saw that picture of the airplane. 1.5 billion. I'm sorry, I said 15. 1.5 billion. Speeding up deliveries. So Bezos a while back said he wanted his own airline, and now he's getting it. So he can outsource it to FedEx and UPS and DHL and all these folks, or you can do it yourself, right? So you take a look at the costs and see whether it's worthwhile to do so. The only issue there is, again, like airlines go bankrupt on a regular basis. So if UPS and FedEx don't, but there are certainly tough times. So that's kind of crazy. I'm seeing this fuel prices up in the $6. That's cheating, because I don't think where in the country is it at $6? Put it in the chat if you know, because I've not seen that. Of course, I live in Texas where we don't see $6 gas. All right. Southwest saying COVID variant starting to hurt bookings. So if you've been following the airline travel kind of saga, it has been expensive to fly. It was super cheap, right? They're enticing everybody back. Now all of a sudden it's super expensive. And I think it's going to go back to cheap again as people get a little more concerned about the Delta variant and how it's all playing out. Okay, let's switch to that Pfizer chart that I want to show you. This is the chart you love, right? So I bought it in or around the 40 level. I started acquiring it here, got out of largely Moderna and BioNTech. I went to safety by going into Pfizer, which I considered a more safe name. So anyhow, you've gotten a good 15, 16% pop from there. I do think when you look at the valuation sitting at a 13 PE, 3.24% dividend, nobody's shorting Pfizer, right? And the potential that, this COVID thing is a new part of life. All of those things go together into making me think this is a good investment to stick with for the long term. I also like AbbVie. Here's your chart on AbbVie. It's not as sexy for sure because the move hasn't been made. But when do you want to invest in things? Yes, you want to invest in before the move's been made, right? So this is also what Pfizer's chart looked like for like 3 months while I was acquiring it at $40. So what's to like? 8 PE, 4.5% dividend. Who's shorting this? Nobody with a brain, right? So, but all performance numbers are not there. So that's why I like it here, because I think it could easily tack on 20, 30%. And when people run to safety and sell their Splunk and their Twilio and their Coinbase and their Roblox and all the other names that carry a lot more risk, I think you'll see money flowing into these names in a market sell-off. All right, let's go over and get set up for the market open. Good morning, everyone. Welcome to the On Time On Target play of the day. You're looking at the TD Ameritrade ThinkPipes platform. You have 4 screens in front of you, one of which on the far left is the S&P 500. And then you have 3 more, 2 longs and a short. All right, we're off on Wednesday, August 11th. We have the nice big jump from the inflation number this morning. So that's what you're seeing, the moves higher. You have Wendy's with the earnings beat. So I like that to go higher, plus a lot more, kind of an opening move. Opening society move. Here's your Coinbase. It's up basically off of an earnings report yesterday. So you're seeing the move up there. We would need this to come back down to hop in on this in a trade long. Here I want to talk about FGen and the short. Now it's a lot lower volume here. That's why you don't see it flopping around. But again, moved down from 36 to 20, gained all the way to 30. 30 back to 24, and the bottom fell out down to 14. It's tough to find anybody that would be buying the stock here. I just don't see it. So again, volume's a little bit of an issue. First minute, we're still working on 28,000 in volume. So a little bit rough to hop in there. Again, can't go into coin long here because it's already kind of taken off on us. We can get into Wendy's long because it's kind of setting up here. All right, low of the day, 22.6. That would be a 2280 would be if this low of the day holds. I'm just making a mark there. See if it holds. I'm going to zoom in a little more. Nice 20-cent stop. If this holds, we'll be at 2280 to the upside. And again, using a 20-cent stop. So that's what we're looking for our entry. If it doesn't hold, then we will reassess that where it actually does hold. So again, get ready for 2280 long in Wendy's. I know it's fallen out of our window and I don't like that, but that also means that it only has to get up to 5% or 6% on the day for us to make our money and be gone. Okay, so again, 2280 is what you're looking for on Wendy's. All right, we're going to look at that other security firm, Inlock. All right, same thing with Inlock. With that first green bar, there's no real entry point here, so we would need to have it come down for a couple minutes back to the same area and then flip. For that to be an appropriate entry. So I think our best bet right here is Wendy's. All right, 22.6 did not hold, so we're going to get a better entry. So 22.45 now, that puts our entry at 22.65. We're going to make a little note right here, and I'll clean this up once we have our actual entry. So if 22.45 holds, it'll be 22.65 long. Again, market selling off a little bit. That's why 3 straight minutes of red. Again, 22.65 long on Wendy's, WEN. Oh, we got to wait for it. All right, checking Coinbase out again. All right, we need a new low in Wendy's now. 22.40, we would have to use 22.35. So it puts our entry at 22.55 going north here with the 22.35 bottom stop. If it hits 22.35, I'm not going to take this. I like this entry, but if it continues to fall, we just can't take it. So again, waiting for 22.55 with the 20-cent stop going back up north. Long, that is. Okay, there it is, 22.55. We are in it long. Set your stop down at 22.35 down here. Disregard some of the other chicken scratches I have in there. I'll try to write an arrow right over top of it. And again, with the 20-cent stop, you're looking at a total 60 cents move higher. So 22.55, this is our first R, is 22.75, that'd be 1. And then 22.95 at this level will be 2. And it just hit the 22.35, just touched it, so we are out. So another red X of shame, been kind of collecting those lately. So we're going to try to get these trades going. We do have the volatility. This one made perfect sense, but we took a 1R loss on it and have to walk that one off and move on. All right, we'll look into the long-term charts of the day. Revive Therapeutics up. That's an Apple call you see at the top, so that usually means Apple's up to a certain extent. If the call is up, I don't see it on our list here though. C Unlimited, that's a tech firm. Roblox, again, I love that company long-term. And that is one of those, I'll tell you right now, I don't care if it sells off. And I don't care if they try to raise capital gains to, 50% or whatever tax reform comes out, just because this name is too strong long-term. So that would be one I'm holding through. Put Apple on that list. Put a MicroStrategy on that list, actually, because it's separate. NEO got an upgrade the other day saying it's the best of the Chinese automakers. I think that's still for debate, but anyhow, moving the stock higher. KWeb is our Chinese tech. I think tomorrow I might revisit the Chinese tech names just because it is in play there. And as far as what's on the downside, TQLB is a spec name. You don't have to worry about that. AMC continues to fall. Trade Desk down. Nikola, we don't own Nikola. There's your Pfizer off a little bit today, even though we were just talking about it. Just had the big move yesterday, so a little bit of profit taking there. GoDaddy whiff numbers so the other day on earnings, so that's selling off a little bit. All right, let's switch back to this Investopedia Academy that I wanted to show you about, and that is on this screen right here. So when you can go to Khan Academy and learn about anything for free. Most people don't, for some reason, just don't want to do that. Now, if you want to, as an entrepreneur perspective, if you want to learn a skill, and one of the ways to make money in this world is to learn a skill, stand up a website, build some courses out, and then sell your courses. Right. And that's very common. And, you don't have to be the world's best expert to make money in that. You just have to know more than the masses, which if you've studied it at all, you probably do know more than the masses. So, but if your price point on that stuff generally tends to be around $100 or $200, because you won't sell a whole lot, but you'll sell enough to make, a significant amount of money on that. However, if you want to, those programs are hit or miss. I would stick, honestly, I would rather pay more. I'm at a little different price point than some, but if I would rather pay more at this point to get good information that I know is good. And that's why I bring this out. So expert instruction from Investopedia, popular courses, become a day trader. This is the one where you can get really taken online, if you will, if you just pay anybody's cost, right? The one I did for a couple years, which is the system we're using today. I watched that for about 6 months before I decided to pull the trigger, but it was in the thousands to learn that. And I turned around and I did my PhD dissertation on it, which again, didn't get that published because of the fact of a lot of things I discovered in it. But she's selling that course for thousands, and, depending on the size of your R, you're making that money back real quick. There's many out there, I think, that are just complete scams. So you have to do your own due diligence. Make sure you believe in the process. If you don't believe in it, you'll fail as a day trader big time, or you get moved off your game just because your strategy doesn't work, several days in a row. If you know it works over time, then you stick with it, right? So not really saying this is probably your best bet to become a day trader, but certainly these other ones, investing for beginners and trading for beginners, that's going to give you the little things that you probably aren't just going to pick up from just basic paper trading. So there's technical analysis, it goes advanced financial modeling, options and advanced options. You could spend 2 years studying options and still not know what you're doing, to be honest. You really have to understand the math of what's going on. Pick stocks like a pro, that's kind of like a scammy type type name. So I'm going to pass on that, but then you have fundamental analysis. If you truly want to be a trading junkie, get into Forex. Forex markets are open 23 hours a day, so that gives you 30 minutes to sleep, and you can sit there and get your trading hit all day, every day for fractions of pennies, and have fun when tax time comes around. Excel for finance, that's more of a businessy type personal budgeting sort of thing, and then personal finance, of course, is bringing that into your house. How do you get out of debt, that sort of thing. So depending on what you need, consider these courses. I don't know if it's $199 for all of them, or if it's per course. I would imagine it's probably per course. So you're looking at, couple $1,000 if you were to sort through here. But certainly if there's one thing that you wanted out of here, it's probably worth your couple $100 to go with a name that you know. And it's also the 8th grade reading level, so you don't just sit there and drool on yourself while you're trying to figure out what it is what they're talking about. All right, that's all I've got for today. Have a good one. We'll see you back tomorrow on Thursday. Bye.